We could be entering into a new period for our markets that sees a lot of cash come back into them. Here in this video, we're going to break down exactly why and what kind of effect this could have on AMC stock. I hope you're ready and I hope you're excited because this is a bullish video on AMC stock. In the grand scope of things, I still am bullish on AMC, regardless of what a lot of people think. I just really don't care in that regard. And I'm gonna tell you guys how it is, for good or for bad, and hopefully that's why you guys come to this channel, because I'm not gonna cater to anyone's feelings when it's about your money, right? Cater to feelings when it's about feelings, not when it's about money. And I believe this could be the start of something, a new change in our markets. Now we'll talk about exactly what that could look like. Let me know what you think down below in the comment section. So, first things first, I want to point this out as cleanly and clearly as possible. Fed Bostic today said some things that are not exactly great for stocks in one sense. Okay, so markets are currently pricing in 6 rate cuts by the end of 2024. 6 rate cuts. To some degree, with that level of rate cuts being priced in, that either implies that inflation just falls off a cliff, and that justifies the Fed cutting rates 6 times in 2024, or the economy starts to show weakness. Now, obviously, Fed Bostic, a little bit more on the dovish side. He does not believe we are heading into a recession, clearly. He says, which this is just like kind of, this is like the Fed is asleep at the wheel, this remark. He says, I will be looking for early signs that changes in unemployment are starting to accelerate. I am not seeing it yet, but we just had ISM service employment come in at one of the lowest, worst prints we have ever seen, ever. I mean, but we're not seeing it. Okay, kind of asleep at the wheel there. But he says, which I think this is very notable and is going to feed in the rest into the rest of this video. It says, Fed Bostic, I see an initial rate cut in the 3rd quarter. Whoa. Markets are pricing in the first rate cut in March. He says we may only get 2 rate cuts throughout the entirety of 2024, and he doesn't see the first rate cut until the 3rd quarter of 2024. He says business contacts continue to say they are in hiring mode. I have not heard that from any of my business contacts, so I don't know where they are getting that information from. Now, why could this be bullish? Well, on one hand, stocks just continue to rally following Fed Bostic. I mean, look at IWM. It's basically been straight up all day. Look at the SPY, pretty much vertical all day. Despite Fed Bostic saying we're only going to get 2 rate cuts, that, we're not seeing weakness in the labor market, in which we definitely are. Okay, we definitely are. But that's interesting. 2 rate cuts is far from 6 rate cuts. But what this is saying, or what the Fed is basically saying, is we don't see a recession, which a recession is ultimately the worst possible thing that could happen. I don't care if we get no rate cuts in 2024. You would rather avoid a recession and get 0 rate cuts and see an economy that's doing just fine, compared to 10 rate cuts and a recession. Your stock prices will do better with no recession. I guarantee you that. Because why? I mean, recessions typically, unless it's the Rona, recessions tend to last like, 1 to 2 years before you hit new all-time highs in the markets. They don't tend to be this straight down drop and straight rally like you've seen during the Rona. That was very much an artificial recession, pandemic, whatever people want to call it. So this is interesting because today is a lot of Wall Street's first day back in the office. from this whole holiday vacation period. And you're seeing money get put to work, even though Fed officials are saying we're not going to get as many rate cuts. So I think this market, weirdly enough, is not trading based on rate cuts or how many rate cuts we get. I don't think whether we get 6 or 5 or 4 rate cuts, that's affecting anything or will affect anything. I think it's more about the recession and the, possibility of seeing one. And the Fed being very confident, saying what they are saying, is saying we're probably not going to see a recession. So how does this create a new dynamic for our markets? Well, if inflation continues to fall, that does justify more rate cuts. That does justify the Fed being more aggressive, cutting rates. If the economy worsens, obviously that's going to be bad news for stocks. But as long as inflation continues to fall and the economy is holding up, we may actually get a soft landing. Now, all of this, what's that going to do? Well, I should also point out we are going to have earnings season. We are going to kick off this earnings season with your banks on Friday. JP Morgan, United Health Group, it's not a bank, Delta, Bank of America, Wells Fargo, BlackRock, Citi, BNY Mellon, those guys that will report Friday pre-market. You also have KB Homes, Wednesday and after hours. As long as earnings don't come in as a big disaster or underwhelming, big disappointments, I think things will be fine. And I think big tech obviously matters the most for the broader kind of markets themselves. But banks are definitely important as well. You can actually see banks are not doing so great today. I did actually make a trade on JP Morgan. If you guys want to see that trade, check out the link down below in the description of this video. But nonetheless, earnings season is going to be important as well. I'm not expecting earnings are just going to fall apart and things are going to get much worse. It's just not what I'm expecting. Is that a possibility? Of course, that's a possibility. But from where I see it right now, you might start to get a lot of this, $6.2 trillion in money market funds that starts to actually come back into our markets, because not 6 rate cuts, not necessarily earnings coming in super spectacular. We're only expecting like 7% growth from earnings in 2024, which is pretty in line with the average year. It's because we ultimately will avoid a recession. At least that is what Wall Street is saying. Whether or not that is true, we're going to need more data. Some data that we will get this week will give us a little bit potentially more insight into that, especially your weekly jobless claims number that will be coming out for January 6th, and that is on January 11th at 8:30 in the morning. So this upcoming Thursday, as well as the CPI report. And a couple smaller data points like wholesale inventories as well. So all of this, as long as it continues to point towards no recession, I don't think it matters about rates or necessarily about earnings, as long as they're not a disaster. Trillions of dollars could be about to enter into our markets. Again, keep in mind, stocks are ripping higher today, because presumably a lot of Wall Street, this is their first day back, so they're probably out doing some shopping. They're probably out buying some stocks. AMC stock also up about 3.5% at the time of recording this video. And it seems like things are starting to shift, at least today. Maybe I could be wrong there. Maybe we do go through a larger crash. If we do, it's because data, economically speaking, is bad. We start to look like we're heading into recession, or some kind of black swan event in which you can't forecast that, so I'm not even going to try. Okay. Now, if you look at Atlanta Fed GDP Now tracker, your latest estimate is 2.5% GDP for Q4. We're coming off of 5.2% GDP for Q3. It looks like the GDP estimates continue to stay at a good place. And that's, exactly what we want to see for this presumed soft landing. Now, specifically with AMC stock, we are likely to see money come back into this name. Now, the problem is AMC continues to dilute shareholders. if we get a commitment that Adam Aaron will not dilute shareholders, that is when I would want to go very leveraged in some upside call activity. Until then, I'm really not doing much with AMC. Holding my position, that's all fine and dandy. But I think Adam Aaron will do that because Adam Aaron needs to get AMC stock higher. But if he does not do that, then there's going to be a big problem on our hands. So we definitely want to be watching all of these things. I think just liquidity coming back into our markets without any dilution will be a big positive for AMC stock. Let me know what you think down below in the comment section. A brief run through of the option activity and the shorting activity with AMC. You have seen 3 orders today totaling $354,000 with a positive order value of 6%. Not exactly great. Call volume of 73.77%. Put volume of 26.23%. That looks a little bit better. If we take a look at these numbers, keep in mind I think AMC stock is 100% sold short, but I cannot quantify that in any way possible. You got to come to your own conclusions. Now, short interest of free flow, according to Ortex, 8.38%, $108.62 million worth of short positions currently in AMC. Days to cover 1.03, 21.01 million shares that are currently sold short, 18.55 million shares currently out on loan, cost to borrow 1.07%, utilization 29.04%, and a short score of 52.79 out of 100. Cost to borrow max at about 1.9%, cost to borrow average 1.11%. Now, specifically with AMC stock, if we do start to get more kind of money flowing into our markets, then I think AMC again could reach in the 650s, maybe as high as $7 by the end of this week. But that would be quite a rally from here. And that would be if CPI comes out good, if PPI is good as well on Friday. So let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.